Hey everyone, stick with us versus herd. If it's your first time here to the content, hit subscribe. If you want to get notifications when we go live, tap the bell. And if you want to join the UVH fam, our community, links are below in the description to our Discord and our options trading group on Facebook. If you're here right now, say what up. Good morning. How you doing? S&Ps are up 34, Dow's up 233, Nasdaq up 110. Seem to be moving back up right now. We got Micah, Steve, Lion, Slick. How we doing? Just getting things going. Hope you all had a nice weekend, relaxing weekend for the most part. You know, hard to say. Hard to say what today is going to bring. However, I mean the futures gapped down pretty hard last night. You know, gapped down like 100 points, and then it came back up. Another 60 points. Actually, sorry, another 110 points. What's going on, Carmine, Daniel, Rodney? Man, we up 1+ on the S&Ps. Yep, we're currently up 1%. And I do want to say again, like, look at the rate on how slow that it's moving. You know, the market, like I was saying in last night's video, the market has definitely changed in terms of its movement, and some of the characteristics change. So, you know, and this is where traders are going to start to get messed up in the market, is when the market changes, the dynamic of the market shifts, the same strategies are not going to work. So that's why in options you have a lot of options to different strategies, different things you can implement. And when the market is slow, we have to move slower. When the market is fast, we can move faster. But it's not that easy, because over the course of 3 weeks or a month, I mean, it takes 21 days to develop a habit, right? So over the last 3 weeks to a month, a lot of people are like habitual trading. They're just rinse and repeat. And then when the market shifts, they don't take an account for it, and then they potentially blow up their account because they're not using proper risk management. They think that they're always going to make that type of money. They think the market's going to stay consistent. So that is where people are going to get tripped up. That is definitely where I got tripped up. So when there's a shift in the market, I know definitely when there's a shift in the market is when the strategies that I had implemented start becoming big losers. So last week, you know, it was a struggle. Monday, I was down 600. I traded my way back in the green. Tuesday, I was down 1,500. Wednesday, I came back like positive 1,000. Thursday, I was back up 500. And then like Friday, I was down a few hundred again. So that's why you need to always reevaluate the market. Right now, because of last week, I'm just going to be taking it, you know, really day by day, and just kind of going low and slow, because when the market shifts, you're going to get ripped a new one. And you saw on Monday and Tuesday that shift started to happen, and Thursday and Friday the market was significantly slower. Yes, there was wide price action, sure, but the amount of time it took to get from point A to point B was a lot longer than it was a week ago, 2 weeks ago. So that is what I'm looking at here for my trades, and for this week coming forward, is just taking it one trade, one green trade at a time, stacking those green trades. Don't worry about how much money you're making. Focus on the charts, focus on your setups, focus on what the next trade is going to be, what your profit target is going to be. If that trade goes against you, set your exit strategy, you know? Trevor, what's going on? If you're just joining, say what up. The weekend seems so boring these days. David, going to be crazy. Hank, Tobin. I'm here, looks like going to be blowed up today, doing another me. Gold and silver, what's going on? Morning, Polo. So, yeah, this morning I did make a little bit of money. So I'm going to be losing some money today on Boeing, but never mind that. We got to move forward. I did make a little bit of money on the S&Ps. I did take it off this morning. So I bought it last night, 25.05. I sold it at 25.28. I did show my video last night, kind of what I did. Hey, Jeff. I had a bracket order set up for a stop loss of 24.75 and then a sell order for 24.80, and it looks like I priced it a little too high. I should have priced it around 25.50, 25.55. It appears that like this, because then I left a couple $100 on the table. What I was worried about why I took that trade off is because in here, I mean, yes, it was slowly grinding up, but I was afraid that this was going to fail and come back down. And I didn't want to lose money. So I'm like, you know what? My first trade of the week, I don't want to lose money. I don't want to be break even. I want to make money. So that's why I took the trade off. But it appears I left about $150 left on the table by by taking that trade off. But, you know, it's okay. It's okay. In this market, we can't be greedy, okay? We can't be greedy. We need to use proper risk management, rinse and repeat gains, and that's what we need to do. Bailey looks like a head and shoulders. Yeah, Boeing. I didn't expect this to happen, but Boeing said that they're not going to take the government money, which I probably should just close it out on Friday, and I didn't. I thought maybe we'd gap up, but looks like we're gapping up, but Boeing is not. You know, looks like I figured right, but Boeing is not going that direction. So we'll see. Maybe once some volume kicks in, you know, Boeing will move on up. I don't know where this market is going. Clapped my account last week, coming back with 200. I think Bears will let Bears until the cases peak 1 million sometime this week, possibly. So, Aaron, people that were struggling last week. When I was talking about, I don't know if you guys were here in the beginning of the video. It's tough. Nick can't get married to the symbols. So what I was saying last week, and I'm gonna pull it up in here. I'll pull it up on Tastyworks because it's bigger for you guys. If we look at SPY, and this is where people are getting tripped up. Now, today's expiration, 0-day expiration on SPY, this is plus or minus $9. On Friday, the S&P's moved down $7. So it's overpricing. The options are overpricing the move because the premium sellers got burned so bad. So be mindful. We're not going to be stacking the 500 to 1,000% gainers when they're pricing in the move above what is going to happen possibly. So we can, I mean, maybe it will go, maybe SPY will go up $20 today. Maybe it won't. But I can say for a fact that the pricing now, $9, you know, 3 weeks ago, 4 weeks ago, this was $2, $4. Now it's $9, $10, you know? So if the expected move is plus or minus $9 for today, don't be expecting to make huge bags of money. This is where options trading becomes a business and not a get-rich-quick scheme. You know, this is what people leave out, that, you know, they only post their big gainers. But once the option pricing gets smart, the market makers and all them people, they start saying, hey, you know, we're getting kind of tired of getting ripped off over here. We need to take some money back. So they're going to start overpricing the options here. So this is where the real traders are going to come out, where the people that were, you know, playing far out of the money, that were rolling thousands and percents. I hate to say it, but most of those people are going to lose it all. You know, most of those people are going to lose it all. So I don't want you guys to be that person. I don't want to be that person. So pay attention to the option pricing. Option pricing is going to tell you, like, do you think that SPY, to make a lot of money, do you think SPY on 0 day is going to go more than $10? Maybe it could, but odds are not good. Odds are not good. So if it goes up 5 and then it goes down 10, that's only down 5. So you see what I'm saying here? Is that's kind of where the option pricing. So even if we go up right now, like SPY is currently up $3 at open. It's up $3 at open. So far out of the money, money's already going to get burnt. Far out of the money. One standard deviation, get clapped, you know? right at open. Those are going to be losing 90% of their value, 85% of their value right at open on SPY. So, you know, you just got to be mindful of the option pricing right now. Pay close attention. They're going to try to get their money back. And this is where a lot of people are going to fail, you know, and I don't want you guys to be that one. I'm trying not to be. You know, I've noticed that the change in the market over the last week has definitely has been in the retail traders' favor. So, you know, yes, we're getting some nice movement and stuff, but the pricing the options a lot higher. The moves are going way slower, which Theta takes more account for. You know, before Theta didn't really matter because we were moving so fast and options were priced so low. But now that options are priced high, the stock market is moving slow. It's kind of going to be like a slow bleed out. So you want to be careful. And if you don't know how to sell premium, might be a good time to start now. You know, start learning. Risk is relatively low to sell premium right now because of how slow we're going. Sure, we can kick up some volume. Things can get a little crazy, but overall, we're moving at a snail's pace. You know. BA doing the animal thing, sword to the stomach. I don't know. Get rich quick. Yeah, I mean, if you're trying to get rich quick here, I mean, I think that you guys probably haven't been watching me long enough. You know, that's not what I'm about. I don't believe that anything sustainable should be quick. You know, like winning the lottery, is that sustainable? No. I mean, a lot of people, I mean, I've done it myself. I've made big percentage gainers, 1,000%. And I blew them all in one trade. I mean, we've all done it. You know, I'm not talking like I don't know what I'm doing. I've done it. You know, I've done it. Anything that you could do in options, I've pretty much done, you know. Go from 0 to 100 to 1,000 down to 0 again, you know. Can't wait to sell some SPY premium. Yeah, I might be looking at some premium as well. It's going on 10. So, yeah, Boeing, you know, I don't know what's going on with Boeing because you have to be careful. Yes, Hank, I will look at APRN. You have to be careful with Boeing because there's a lot of factors here. The government's not going to let them fail, and they're saying we don't want the government strings. One side has got to give. Boeing is either going to go down so low that they're going to be begging for it, and the government's going to swoop in and own Boeing or something freaking crazy like that. Or Boeing will just kind of concede over the next week or two and say, you know what, we're just going to have to deal with it. You know, one side's going to get both. Boeing and the government cannot win. One or the other is going to win this battle. So I was betting on the side of the government. I thought the stimulus package, but they said, no, we don't want it. So once we know the actual numbers for Boeing and we know travel's way down, people are not going to be ordering planes. Yeah. I mean, if you're holding Boeing long term, I think you'll be fine. But for tomorrow's Friday expiration, I think we're effed. So, one of the other things that I want to talk about on the stream is that the Fed looking at buying ETFs like SPY, congressional approval would needed to take such a step, but this would be the first time the Fed has ever intervened directly in the stock market. You know, and it kind of compares to, you know, we've been kind of comparing ourselves to Japan for a little while with the negative interest rates. And if we go down, it's quite lengthy. There was actually a lot of info. I was actually shocked for CNBC had some really good information in here. but Bank of Japan had been an aggressive buyer of equity funds with its total holdings around 256 billion in US dollar terms at the end of fourth quarter in 29. That represented as much of 80% of the total market, something that has brought the bank criticism to the nation's economy continues to limp along as the holdings have come under pressure during this deep global market drop. So, you know, I know that the Fed and the government want to save the stock market at all costs, but if they own 80% of the total market, I mean, like, what is this? You know? So this is what I'm concerned about right here, is the government intervening, and the public companies are no longer really public companies; they're more like government entities. and that is where I don't know where the exit plan is. We do know that like at the end of 2018, 2017, they wanted to start unwinding the Fed's balance sheet from their QE, and when they started doing that, volatility started to pick back up, and the market started to go down, and Trump was having a fit. Everyone was wild, and everyone was like, yo, you gotta stop. So they stopped. And then not only did they stop, not only reversed it, then we started, they started ramping up QE again. And now they're doing unlimited QE, and it all started with the repos and all that stuff. So if you guys could do me the favor, you're here right now, hit the like button. I would appreciate it. So that is one thing that I am concerned about. Me personally, people are like, oh yeah, I don't see a problem with it. Me personally, I do not like it. I mean, I think that, no, I don't want a depression. I don't want millions of people to be jobless. But what cost is this going to happen, right? Do we need a reset? Do we need a bigger reset? Do we need a couple years of downturn? And people brought us into this mess, and people are what is going to survive after this. People are strong. We'll make it through. We'll be okay. Will it be hard for a few years? Definitely. Is it worth the Fed propping the market up just to us to explode into smithereens 10 years from now? I don't think so. I would rather we just kind of get it over with. But then again, I'm not retiring in 2021, so there's a lot of pressure. Obviously, somebody in his 30s is thinking a lot differently than somebody in their 60s and 70s. When all your friends own all these public or all these CEOs of these public entities, I don't think it's fair. I think it should be more, because those generations are not the generation that's making the decisions today are not going to be the ones that are going to have to clean up this mess 10 years, 20 years from now. So that is what I'm worried about, is we're going to have to clean this up. My kids are going to have to clean this up. But, people, the Fed, Trump in his 70s, Biden, all these people 70s and 80s, I mean, what are they trying to do? I don't know. But it's a mess. APRN. So Blue Apron, I mean, all the meal kits have really skyrocketed. I mean, it looks like it's leveling out here. I mean, for me, what I would do is I would probably buy the top 10 strike calls, and if it dips down to 9, I would just sell. That would be my stop loss. But Blue Apron, I don't know if you know anything about this company, but they've been literally struggling. They had a reverse split. I mean, this company is junk. So that's a reason why I wouldn't buy it. Yes, this is probably making them ramp up efforts, but for me, honestly, there's much better options than Blue Apron right now. And Blue Apron is a luxury item, I would say. Right now, I would much rather order groceries from Instacart and Amazon Fresh and Amazon Whole Foods. Whole Foods does deliver if you have a Whole Food value. If it's not through Amazon Fresh, I found out you can also order foods from Whole Foods and they deliver to you too. So there's a lot of options. Also, a lot of other grocery stores are doing that. So people that are unemployed, people that are watching their money right now, they're not going to be buying Blue Apron, very small dinners. They're going to be buying, stuff to make a chili, stuff to make pasta, stuff to make large quantity, stuff to make soup, stuff like that. I don't see, I think that people rushed in and bought Blue Apron, but when times get hard and people are laid off and don't have that disposable income, Blue Apron is a luxury item. And that's just my opinion, of course. So yes, I signed up for like Butcher Box and stuff like that, but that's just meat. Sure, that's a luxury item, I would say, like to get meat like that, and it's a little bit more expensive. But Blue Apron is the individualized meal kits that are very small. I've ordered them before. They're small. They basically feed 2 people, and you're not even like that full afterwards. So I feel like unless they made significant changes to their product, I think they're going to struggle as well. For the price for what you get, I mean, this is not 2019 anymore, guys. We're in 2020 when unemployment's at 20%. So that's just my opinion on Blue Apron. I mean, they were struggling when we were at all-time highs with reverse splits in the IPO, I mean, if you just look at the chart, it'll tell you everything you need to know here. You know? And the only reason why it's at 165 up here is because they did a 1 to 15 reverse split. I mean, if they didn't do a reverse split, the stock would be delisted right now. So, I mean, I personally think there's better opportunities in the market. You know, I think, you know, I know that's cheap, but I don't like that company in this situation that we're in, facing a recession, economic collapse, whatever you want to call it. We don't even know what's happening. You know, we don't even know. All we know is we're sitting inside our house and we're told not to go outside, which is like the most un-American thing I've ever heard. But there's a reason for it. Trump finally conceded and says that there's going to be 100,000 to 200,000 American deaths as best case scenario. So why didn't they say what the worst case scenario is, you know, or the middle of the ground? So I'm a little bit worried that they said that 100 to 200,000 deaths is best case scenario right now. And what are we at right now? Like 2,000 deaths, something like that? Yo, Jesse, what's going on? If you're here right now, say what up. So that's what I am concerned about right now, is that these projections are way, way low. And I feel like the numbers are, I don't know, I can't prove this, but I feel like, because there's a lot of people on Facebook and there's a lot of people, you know, friends and family members that, you know, I have friends that they say in their family members this weekend. I have family members in my family, not that I see regularly, thankfully, in this case, have coronavirus in Chicago. You know, and they're struggling. So I feel like there's more cases than what we're saying. You know, I don't know, because it's becoming more. I'm seeing more and more often that the circle is getting a little closer. You know, every time. You know, first thing it was in China, then it was in Europe, then it was like, okay, just some people in New York, then it was like, okay, now there's some people in Illinois, and then it was like, okay, there's some in Cook County, you know, and then in Illinois we had the first coronavirus infant death this last weekend, and you know, so I don't know, but what I do know is it's closing in, so I don't know if we're all just going to get it and that's what it is going to be, or what the case is. Johnson & Johnson did say today that they have a vaccine going to go to clinical trial in September. Just keep that in mind. So that's why they're gapping up pretty large. They closed at 123 on Friday, gapped up to 130. So they're seeing Johnson & Johnson might see a little price, little pop right now into the vaccine trials, but you know, Johnson & Johnson's been kind of range bound. I mean, it does like this 130 area. If it does pop up to here, I don't see it making all-time highs or anything anytime soon, but it does like this area. I was trading it for a little while. I traded it, and you can see that it's pretty violent here on the daily over the last month or so. So you just want to be careful. You know, I try not to get too much into the pharmaceuticals because there's too much research, too much unknown, and so many delays that really screw up your position. You know, so I typically don't like trading the pharmaceuticals or the drug trials, and that's just me. I just think that there's just easier targets. And yeah, Brian, I do agree with you with INO. I don't, you know, and if you own stock, that's one thing, but when you're trading options, what you try to do is reduce the amount of variables, and time being one of the most costly variables. Pharmaceutical companies need time, and things get delayed. Sometimes things happen. Sometimes amazing things happen, but in the pharmaceuticals, from my experience, that it takes a long time. You waste a lot of money, and you waste a lot of time researching. So I find that it's not pharmaceutical industry is not the best to trade options on. If you want to load up stock, I mean, you load up stock. I mean, that's fine. 28,000 died from COVID. 19 out of 7 billion. How many died annually from medical errors? So that's what I'm worried about. Yo, Brooklyn Kid, what's going on? Sergio, FedEx. Let's look at FedEx. Um, FedEx. I mean, FedEx is still open. I think they're going to try to make a run probably like 150. I mean, we need, it's essential service. I mean, we need it. I shipped stuff to FedEx all week last week. I mean, everything was fine. One thing that I will say here is we have a ton of economic data coming out this week. You know, we have the reports coming in from March's numbers, first week of April this week. Keep that in mind. That's why I'm going to be trading really just day by day here. And we have the reports. Last month's reports are going to be in this week. So, you know, we have ADP, we have trade deficit, we have factory orders, we have the unemployment rate. We're going to have weekly jobless claims, of course, Chicago PMI. I mean, we're going to have it all. So just be mindful. This week, out of any week, is going to be very, 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 very report heavy. So just be mindful that we're going to experience a lot of volatility this week. You know, don't think you know where the market is going. Stay humble. Just keep your profits. You know, don't give it up. Don't give up. You know, don't try to swing for the fences. Like I was saying earlier in the stream, don't try swinging for the fences when the options market is already pricing in the move. Now, with these reports, maybe it's way under. Maybe it's way over. I don't know. So that's what we have to find out. And if you don't know, you know, we're pretty much in our uncharted territory. If you don't know, you just got to take it one trade at a time. What do you think about the Zoom hype? I mean, I think that the Zoom hype is, you know, warranted because of the amount of I don't think it's hype. I just think there's a very, very, very high demand for their product. I mean, everybody's using it. So it's at 151. It got to 159. So, you know, in my opinion, unless something changes, it's probably going to be a buy the dip stock. You know, that's just how it is. I mean, do you want to buy? I mean, it's a scary dip from 165 down to 134. That's a $30 drop. But, you know, and there's really no support. So for me, I haven't been trading it because I don't like to go on. I don't really like trading meme stocks, you know. So I'm more procedural. I like, you know, when market opens, I set up for business. I find my entries, my exits. I already have a plan. I'm trading certain products, so I'm buying and selling certain products almost daily, and I stay consistent in that way. And like I said, you know, in options trading, you don't want all these random variables. If you can lower the amount of variables, the easier it is to make profits. Where can I find the impact report? I'll send it to you, Colin. We made it. What do you think is the biggest economic report that could move the market? So we're going to have the ADP unemployment report. We're going to have trade deficit. We're going to have the weekly jobless claims and unemployment rate. However, last week's jobless claims were off the chart, and we had the biggest green day ever. So, you know, be mindful. Remember last week, jobless claims were 3.3 million, and we had the biggest green day we've ever had in the history of America. Well, one of them. Maybe not the biggest, but one of the biggest. So this is not going to appear the way that you think it's going to appear. A lot of people thought we were going to gap down today, and look, we're up. Look at the way we closed on Friday. People was like, oh, this is a for sure gap down on Monday, for sure. So far, we're moving up. So concentrate on the price action. You don't want to get caught with your pants down. Things are not going to make sense, especially with the Fed and the powers that be. Stimulus checks were approved on Friday. We're supposed to get them in 3 weeks. So if you're getting those, congrats. If you're not, you got to pay your child support. But there's a lot of stipulations. There's a lot of stipulations in there. I mean, people that are in college that are like 18, that parents are still claiming them as a dependent, you know, they're not getting a check and the parents are not getting paid for them. So anyone under 17, I mean, so there's a lot of stipulations. I'm actually going to be doing a video over like some of the stipulations on like who's getting a check, who's not getting a check, because everyone thinks that they're getting a check, and not everyone's getting a check, okay? Not everyone's getting a check. All right, we're about to open up here in 20 seconds. Just trying to go through some of these comments here. We are up. Do you have a mouse in your pocket who's also in the stock market? He's also into the stock market. The child support thing is a source. Yeah, I know. I don't know. I mean, we knew that when they were going to approve the stimulus, they're going to stick it to somebody. And of course, it's people that don't have money, you know. All right, so market is pretty much flat, just chilling. Boeing, I'm down on another $100 on Boeing. So I did, you know, thankfully I made a little $100 this morning. I'm down on another 167 on Boeing, but you know, we're gonna have to make some good trades to clean up this trash here. We're gonna have to make some good trades. Zoom's dropping like a rock right now. See you in the Discord. So we'll see what happens. I want to see what happens with ES coming at 25.60 here. Can it push above? Right now it's looking like it doesn't want to. 5-minute chart is looking pretty decent though. Just popped up $12 here. Apple's really pushing right now. So I don't like to open trades within the first 15 minutes of market open. So that's why I am going to just chill. Costco's going up. Of course it is. I did have a really good day trade on Costco on Friday. And I think Amazon's here. My dogs are going nuts. I was expecting a grocery order this morning. My dogs are going nuts, so I apologize. I don't know why they're not just leaving at the front door. Like, why are they not? You see all my alerts here for Costco. What options am I planning to trade today? I'm planning to trade Apple, SPY, and ES futures. Maybe some soybeans. I'm feeling the soybeans. Soybeans have been paying out. Don't make fun of me. I'm looking for soybeans to contract a little bit. Maybe come down to 880. Buy me a nice day trade on soybeans. That would be nice. Walmart's been tough. I generally, like, outside of this, I don't like trading Walmart just because every time I've traded Walmart, it's generally disappointed me because of how slow it's moving, and I feel like it's going to make its way back up to 120, but I just don't know how long it's going to take. So I generally don't like trading Walmart. A lot of people trade Walmart. I mean, we've had a great volatility, but like this choppiness, I mean, this is not easy to trade. When the market's going down and Walmart's going up, and you know, this is pretty much maintained flat. You know, Walmart's been maintaining, which is good, you know, but it makes it very hard to trade. You get squeezed out to the downside, you squeezed out to the upside. I mean, so, you know, this is not like an easy trade. This, you know, Apple, way easier. SPY, if you look at the chart, SPY, way easier. SPY is even easier than Apple. You know, way easier chart to trade here. So, soybeans. I think there's a soybean ETF. I don't know what it is. I just trade the futures on it. Thoughts on SLV? So I did take profits on SLV a week ago. I do think that if it has a gap down this morning, but it could put. I think if it could hold 13, we could make a push back up to 15. But it seems like it wants to move slow. Gold is down as well today, so. That is the game plan. Definitely appreciate you all. I gotta go bring my groceries in. As always, I'll be in the Discord. Stay safe, stay green. It's us versus herd.